Hey everyone, and welcome back to yet another Stock Talk. This is the weekend Stock Talk for May 10th, 11th, and 12th. So I read everyone's comments from yesterday's video. So I want to thank Alan, 7-Day Options. There's a Russian name. I've seen you before that I'm not sure how to pronounce, but thank you very much for commenting. Coolio, seen you before, and then Claude. So thank you everyone for commenting, and I'll try to do these videos at least once per week. So welcome back. So remember in yesterday's video, I talked a little bit about how SPY is at near-term support levels, and there is resiliency in the markets. Now, what you will hear in the background in the news is that the trade tariffs by Trump and President Xi of China, whatever outcome is going on, that's influencing the markets. And that may very well be true in the short term. So, but the expectations constantly change, and this is why it's hard to rely simply on the news to make a trade decision for yourself. The reason here is this, okay? While we were climbing, right? While we were climbing, and this was up to May 1st. People were thinking, okay, we're going to get a trade deal. People were pricing in the trade deal, right? Last weekend, Trump came out. Looks like the trade tariffs or trade negotiations weren't going as planned. Over the weekend, a tweet was released, and hence we saw a move, and that really put the move in the markets move lower after. Now, what's our baseline? Well, the baseline isn't a trade deal anymore. Now that we're down here, the baseline is, well, the trade tariffs are already in place, right? What's going to happen now? Are they still negotiating, right? Or is China going to retaliate, and that's going to result in another market push lower? So can you see how overall, while the news might be influencing the market, it's hard to trade explicitly based off of the news because expectations change over time. Okay, so with that said, we look at the technical version of the chart. My point here is that in the past few videos up until now, I've been pointing out that the market is resilient. The market is likely to be resilient in the next few weeks, okay? That doesn't mean that we are going to open the gates higher, okay? Not necessarily, because we still have those variables that constantly change that will impact the markets. We saw that yesterday on the futures. Now, now we're looking at charts. What can we see? Well, the market certainly looked pretty resilient at the end of the day today, not at the beginning of the day. To the inexperienced trader, it's difficult because you're managing emotions in this volatile time period. We had this massive dip into December. Trust me, it is on everyone's mind on this current dip, the potential of which we will be going to the previous December lows. Some people have the idea that we will go down there. In my opinion, it's very unlikely that this will happen in the near term, okay? In the near term, we can see, and I think it's pretty likely we might see this next week, a fall towards the red line or the $281 level, which has functioned as resistance multiple times in the past. So what do I mean by multiple times in the past? Let's pull you back to the 2-year daily chart. So when you look at this is a very important value. Can you see this 281 level? So this is a small range, 280 to 281. Resistance, near the resistance, popped over the resistance, became new resistance, resistance, popped over the resistance, came down. Now, today, we didn't hit the mark of 281. It is likely in the next week or in the near future, we will see a move towards 281. But let's think about this for a moment, okay? If the markets come down back to 281, we're at 288.10 now. If the markets come to 281, what will the markets look like? What will our tickers look like? They will all be dropping. If you just remember this morning, SPY was at what? What was the low? 283? 282.30. We were at 280, 230. We were getting close to that level. We rallied off of it. Okay? Does that mean it's one and done and we're all, ready to go higher? It doesn't mean that, right? But it's a good start. Yesterday, I told the members, because I do videos for members as well that go into a lot of specific levels, that it doesn't mean that it has to go higher right now. But the market has the ability to at any point in time, okay? And the market can reverse at any point in time and continue on higher to my ultimate target, which is the higher high line. Okay. So here we go. So we have to be prepared for the downside and the upside scenario next week. Today was an update after a pretty dramatic drop. We're looking for the $281 level to hold at the very least on a daily closing basis. All right, let me just show everyone the weekly chart for SPY, by the way. So here's the weekly chart for the S&P 500. So what you can see here is a red candle. So, when you look at this type of candle, regardless, it's still a red candle. But what this tells us is that you can see the high and the low of the candle, how volatility has increased. At the same time, it's a red candle. It's a pretty significant red candle. So we can and have the ability to see some more downside even in the next few days. However, my medium to long-term outlook still looks fine. Just because we have this drop does not mean we're going to go to lows of last year. It's still on fresh everyone's mind. I think what will happen is once everyone has taken out the notion of the lows in the past, then that decline will happen. And that is when everyone becomes bullish. Even the bears get bullish. That's when we'll get that major drop. But for now, I don't think the sentiment's there. I want to place a little bit of time talking about last Friday. Remember last Friday how we closed? Let me show you, let's show you the 4-hour chart of last Friday. So when we look at last Friday, we closed up here. Remember that? And then remember how Monday we came on lower? Look how we closed today. Isn't this similar? Isn't this how interesting is this how we can fluctuate from the high over the weekend all the way back to the low to the start of the next week? Isn't that interesting? Just don't forget that point if that occurs in the next few days. Okay. When I talked about the VIX yesterday, or TVIX, I placed emphasis on the daily time frame of the VIX, where I said that when we have this type of candle, in most cases, this caps the move of the volatility. When it caps a move, then it's likely that it's hard to push higher. Maybe we can consolidate at the top, but it's difficult for volatility to push higher over that level. And you can see volatility following through to the downside today. Okay, so volatility is declining, which helps with broad markets going a little bit higher today. So that meshes up quite nicely. So far for volatility, we're still seeing declines, and we'll keep it at that. Okay. Similar story with TVIX, down 14.76%. Once again, you can see us coming down back to the 20 period moving average. And so right now, this looks pretty bearish in the short term. Can we have a bounce over? Yeah, of course. And I think if we have a bounce, that will correlate with the markets coming on a little bit lower. But by no means does it mean that TVIX is going to keep going higher towards, and then start making, going back to like $38, $40. It doesn't mean that we're going into that type of scenario. Okay. So With crude oil continues to hold over my support level. So you can see here's my support line. It continues to consolidate to the right. So as long as it holds over my support level, I continue to like crude oil. Crude oil didn't do much today. You can see it keeps hitting this 50 period or the 200 period moving average. So we'll be watching this level. I think anything over this level will continue to be bullish crude oil. Any close under that level, we got to be a little bit careful and reevaluate where crude oil is at that time period. Yesterday I talked about natural gas and how natural gas looks pretty positive in the short term. So we had natural gas pushing higher. You can see yesterday we had us holding over the 20 period moving average, and now what we're doing is we're going to the next resistance level, but this resistance level in my opinion isn't that strong, so I think we can still get over this level with some more impulsive action. I think we have the ability to push over that level. So natural gas continues to look pretty bullish in the short term, so we'll keep it at that. And for 4/GC today, we closed right at the resistance line, so not much doing with 4/GC except that we are at a resistance, so we'll keep it at that. You know, this, when you look at this chart, if it's at a resistance, usually it should be followed by a move lower, right? So we'll be watching this one and how this transpires in the near future as well. Okay, so once again, hopefully the sound is good this time. I'm not sure why the sound was bad, but last time I heard it, I thought it sounded fine, but let me know if there are any sound issues. And if you enjoyed this video, we have a Facebook group. Check out the Facebook group. I post stuff on there sometimes as well. And then subscribe to this channel. This is all free. Take a, you get a notification when I'm post a video nowadays, and then you can leave a like if you enjoy this video. Dislike if you didn't enjoy the video. It's all fine with me. But thank you everyone for tuning in. Have a great weekend, and I'll see everyone later. Happy trading, and next week is going to be an exciting week given our high volatility ranges that we've fallen into. All right, thanks everyone.